Hi there, this is Junhao. I've been doing financial planning for over 10 years and people call me the financial doctor. So today I'm going to answer a question that many of my customers have asked me. That is, how much cash should I have in the bank? So having too much cash actually is a bad thing because inflation will actually surely and slowly eat away at the purchasing power of your money. Just take for example, the amount of money that you can use to buy a HDB 30 years ago. Right now, today, you can only buy a car COE, and that's even without the cost of the car itself. So another example is this: if the bank is telling you that they are going to charge you, let's say 2.5% admin charge every year for the deposits that you place with them. So for every $10,000, you'll pay actually $250 deposit, right? So in this case, would you continue putting money with them? No, right? So actually the reality is that the bank savings are indeed losing 2.5% on average. It's just that we don't see it because it's invisible to us. And inflation is very dangerous because one of my good friends says that inflation is actually like a silent robber. Okay, you can't see it, but it's definitely stealing away money from you. Most people don't realize it. So therefore, it's very important that you invest your savings at least 2.5% per annum in order to be able to fight inflation. So of course, while doing investments, it's also very important that you must have enough cash savings just in case of emergencies, right? So there are two very important ratios to remember. The first ratio is what I call the basic liquidity ratio. So basic liquidity ratio, or BLR, is actually 6 months to 1 year of your monthly expenses. So very simple, you just have to add up all your monthly expenses. Okay, for example, your insurance, your utility bills, your children, your family expenses, add all this up together, multiply by 6. Okay, and then you will have 6 months of your expenses. So that is the minimum amount that you should have in your cash in the bank. If you're in the industry whereby job security is more volatile, for example, people who are in the oil and gas industry or manufacturing, or if your profession is highly niche and not easy to get a new job, example, maybe you're a business consultant, all right, it's therefore recommended that you keep more. For example, 1 year of basic liquidity ratio rather than 6 months, because it may take longer for you to find a new job in the event of retrenchment. All right, I remember there was one time one of my customer come and find me. She wanted to put some savings with me, $500 a month if I remember correctly. And when I checked, his basic liquidity ratio is not enough. So I think he only have like 2 or 3 months. So I actually rejected him. So I asked him to go and save up the amount and come and look for me again. Well, he never did come back. Okay, but it's okay, no problem. All right. The second very important ratio is what I call the standby liquidity ratio. So SLR, okay, if you would like to have an acronym for it to remember it more easily. So the SLR is actually a further 1 year of your expenses. So your standby liquidity ratio, pardon me, okay, does not have to be in cash form. It can be in the form of liquid assets, okay, such as stocks, ETFs, unit trusts, things like that. So these kind of investments, right, they can actually be easily sold off within 1 week if you need the emergency boost of money. So remember, at least 1 year of your expenses in these liquid assets. Okay, and your basic liquidity ratio, okay, your savings would be best kept in your long-term savings account. Okay, if you miss out my previous video, so you can actually click the link below, all right, to view the 2 weeks ago's video. All right, and your SLR, standby liquidity ratio, would of course be from your financial freedom account because these are investments in nature. So once you set aside these 2 pots of emergency funds, then you can safely invest in longer term investments such as property, such as long-term endowment plans or long-term bonds. All right. So I hope that these videos has been very useful for you. And if you like it, do share it with your friends. If you have any questions or maybe any topics that you'd like me to cover in future videos, just comment below. All right, and I will structure some topics which I will share in a due course. All right, so goodbye and all the best to your financial success. Thank you.